the Valley Current.
Hey, Joe.
Hey, Jeff.
How does it feel to be on a Friday afternoon?
Yeah, no, it's a little different, that's sure.
It's a Friday afternoon. Most people don't even work anymore on Fridays. You know that?
I got a lot of Friday afternoons left in front of me still, I'm afraid.
It keeps you motivated.
Yeah,
right?
We've talked about this whole retirement thing. I don't see retirement. I see it as a slowing down and more control of my time and working wherever I want. That's where I see it. Yeah.
I think that's the future. I have to say that I hear more and more people retire. Like they literally throw in the towel on everything.
Yeah.
And then they think they're going to have this beautiful life. And then they complain that they're getting into more arguments with their spouse or their family members or their kids. Right. And the kids and the spouse say, why don't you find something to do? I'm telling you, it's really true. And I can't tell you the number of people. Yeah. I can't tell you the number of people that I know who are very wealthy, who have retired, have had the ability to retire. And they're like, I don't have any structure left. And they look around and they say, I don't know what to do.
Yeah, you could just only, it all sounds glamorous, but you can only play so much golf and travel and all that. I mean, to me, I don't know why you still don't do all those things, but you still just work, right? Yeah, just more control of your time.
More control of your time. And I think you should eventually, I have this whole theory of 7 essences. I've told you about it many times. Right. I think you shift from the FQ, which is the financial quotient. You shift more emphasis on what I'll call HQ, the health quotient, and more on IQ. You challenge yourselves in other ways. You realize that there's so many things to be curious about in this world. And the beauty of the 7 essence thing is you start to realize that a lot of your life in building up freedom by having a nice high FQ number, whatever that is, it might just be that you have a high FICO score and you can get a good second trust HELOC loan on whatever you have in real estate. If the rates were actually decent, which of course they still aren't. Right. And maybe someday they will. It's in the news that Trump is really upset with Powell and is going to try to like get him to quit by saying in advance who he's appointing. The guy's got 11 months left in what's probably the hardest job in the world.
Yeah.
Maybe, because he does kind of run the clock.
I think Powell is in a no-win right now because I'll just say maybe he should drop the rates a little bit, but if he does, then he's going to everybody's going to think he's kowtowed to Trump, right? So
it's a weird game theory. I listened to the podcast. Right. It was a good interview, Joe. There's a good interview that everyone should listen to. This guy works for like $222,000 a year, a job that if he were on Wall Street, he'd be paid $222 million a year.
Right.
To basically be in charge of like JP Morgan or, any number of big investment firms. And he does it for public service. He does it for public service. So you got to give him a round of applause. He's an economist. He's a lawyer. He's, maybe not that charismatic, but he gets the job done. And he stood up to Trump. I mean, you got to give him a little bit of credit. Trump has goaded him and, pinged him and roasted him. It's kind of a sad state of affairs when you have that kind of stuff going on for a public servant, right? Of course, Trump would say he works for free because he doesn't take a salary. He lets that be gifted to charity, apparently.
His ego is what drives him. I mean, it's interesting. I have to say he gets a lot of things done, and I like some of the stuff I see, but man, he's just his ego and the guy is just the way he talks about people and he's just not diplomatic at all. It's terrible. I mean,
no, he would be flunked out of corporate America on any standard by the HR department.
Yeah.
They'd say, "You're a bully, man. You're a bully. You're engaged in sexual harassment. You're dating the firm."
Yeah.
I can tell you stories. I can tell you stories of cases I've had where CEOs have done stuff and now it's completely changed. But I wanted to get you on. And this is really kind of something your audience loves to know too, because, I always thought, and, I learn stuff every day, and especially from you. I always thought that the way a home equity line worked was you basically committed to the credit, and then you basically took the credit out and you could put it wherever you want. But it actually now has like a credit card aspect where you can basically charge like against the credit line that just debits and floats based on how you use a credit card. I didn't know that. I thought you got a check and you wrote checks and that's it. You were bound by what you wrote. There was no ease of use that's basically on an iPhone now, effectively.
Yeah, excuse me a second. Yeah, so the way the HELOCs work now is you get a line. We're doing several of them now just because people don't want to touch the first. And prime right now is at 7.5, so that's about what you get. And so you get a line of credit for $500,000, and you get a credit card and a checkbook. So you could go use that credit card for whatever you want. And once you charge, then of course the calculations start on that 7.5% interest only, and you could pay it off or pay it down anytime you want with no penalties. And so it's pretty slick for different money, to use money in that way if you want to.
I mean, if anyone's got some equity in their home and they're paying 22% credit card charges, they could accumulate all those charges and put them on essentially the equity line of credit at maybe 7.5%. And they cut all that interest by 2/3. I mean, that's the basic game. Plus, I think it's tax deductible up to some limit, right? Isn't it?
It is. Yeah. If it's on your primary residence, it's tax deductible up to, they changed the loan amount, total loan amount, $750,000, used to be $1.1 million on your primary. But so in theory, you could do, I mean, it's a great way to use money. I know people that just have them on all their properties or a handful of properties in case something comes along. They want to make a quick, even flip a house or do something quickly, or they're working on a business deal. They're going to get paid back. They use it. I mean, it's a good source.
So, for example, let's just do the math. Let's say someone's got a house that's worth, of course, in California, at least $1 million. And they owe on the first $500,000, so they've got a nice cushion, and they get a $250,000 line of credit called a HELOC, home equity line of credit, and that $250,000 is just an available line at now 7.5%. But if you do the math, if they're paying off expensive debt, maybe over 20%, and it's tax deductible because it's up to the 750 limit, so it's tax deductible. If that's the case, the effective cost for a high earner is really like 4% because they're getting the tax relief on about half if they're getting the deduction both in California as well as federally. So that's not a bad deal compared to the hit from paying the high credit card debt, right?
No, it's not. But a lot of people with credit card debt, believe it or not, are maybe already maxed out on their property, or they don't have enough loan to value to get a credit card. Let's say you one of these people that put 10% or even 20% down. These home equity line of credits, in other words, most of them won't go more than say 80% loan to value. So you can't max it out. So you have to have, as long as you have a decent amount, usually 75% of loan to value or better, you can get a home equity line attached in second position.
But you remember the days not too long ago when these equity lines of credit were like 4%, right? Or below 4%.
Well, yeah, I mean they're based on prime. So as prime goes down, and I'm sure it will in the next year or so, maybe we'll see it moves moves on prime. So those equity lines either move up or down based on what the Fed does. So right now, prime's at 7.5. If he drops by 50 basis points and it goes to 7, vice versa. Yeah.
But there were times not too long ago when it was below 4. I remember because I was getting
absolutely.
And you could lock it in, right? You do like a 10-year. It has a term to it, doesn't it?
At the time, you're right. When the rates are like 3.5, 4, you could lock in what's called a fixed second. You can't lock in a HELOC because that's an adjustable rate. But you can, at the time, there was a time a while back, you could lock in 4.5, 4.5% fixed on your second.
So you in some ways, you're kind of like you are an expert, but you're kind of like a financial advisor saying mostly to real estate people, look, now the time has come. Now the time or, hey, look, you got a lot of credit card debt. Let me help you reorganize what you're doing so you're not paying so much non-deductible interest, right? And the interesting part is, most people don't realize that getting connected to someone like you, where you're actually then going to call them up and say, you know what, the time has come. Like you'd call me up and say, you know what, you've been talking about doing something below 4% with a lot of property that has no second trust deed on it. Some of it doesn't even have a first trust deed on it. But I usually wait until the moment is right. And, it comes in a cycle every 5 or 10 years, it seems, right? It doesn't come like every other year. It takes a while, right?
Yeah, and if you own your properties free and clear, then you go in first position. In many cases, you get a better rate in terms. A lot of people don't know that either.
Right.
And it doesn't hurt to get it even when rates are high because you only pay on it of what you use. So in theory, if you wanted to do some planning, you would put equity lines. I have people do this on 1 or 2 properties, and they don't plan to use it, but they like to have it there just in case.
No, I mean, it makes absolute sense. And most people, I hate to say it, most particularly young people, but old people too, they don't really have financial literacy. They don't really understand debt. They don't really understand credit cards. They like the convenience. They don't really understand most, including my grandkids and probably my kids too. They don't even really get that you can have a checking account and you have the balance. They don't even use checking accounts anymore. Everything is just a direct transfer, wire transfer, and what is it called? An AW, not an AWS.
ACH.
Yeah, an ACH.
ACH, I think. Yeah.
It's all an ACH transfer. You look at. I'll tell you a story here, Joe. You'll love it. I got to tell you the story. You'll just love it. So I decided that probably we're getting to the end of being able to have a gas truck. What does that mean? That means in the future, it's going to get harder and harder to have a truck, like a pickup truck, that actually takes gasoline in it. So, as you know, I pay close attention to early indicators of maybe a coming recession. And one of them is when people are bailing out of leases. And, the F-150 Ford truck is like the workhorse of America. You can't typically go too wrong by having one of those in America. Maybe Chevrolet's got a better, more expensive model. I don't know, but I can tell you in this part of the world, Ford dominates. F-150 is a truck to have. I see an ad on Swapalease. It's for a 1 year old, maybe 1.5 year old, fully loaded Ford F-150, gasoline with the hybrid battery. So it has the battery pack too, and gasoline. It's got both, right? Because it's trying to be fuel economic. The guy is willing to pay $4,000 to me to take over the lease. Really? Are you with me?
I am with you. Wow.
The guy's like, I'm moving to Europe. I got to get rid of this truck. I don't want to keep it in my garage. In fact, my garage is going away. I'm selling my house. Just take this off my hands. Do you have the credit score? And by the way, Ford does not make this very easy to do. You have to fill out a bunch of paperwork. But the interesting part is once Ford approves you, you take over the lease, right? Everything is done on a Ford app to pay it by direct deposit payment.
Right.
And of course, they're going to check your FICO score because they're basically making a financial deal. But the guy is paying up front. Imagine this. Imagine I took that $4,000 and I deposited into like a Bitcoin account.
Right.
And I put it there for the remaining 24, whatever number of months, maybe 26 months is left on the lease. And the Bitcoin triples in value.
Yeah.
I mean, think about what that lease cost. It was basically a zero lease. You basically got paid to take over, and the truck has residual value because the price of these trucks keeps going up.
Right.
Because the cost of materials based on all the supply chain nonsense and tariffs, you know what the average cost for one of these fully loaded trucks is? $85,000. Yeah, $85,000, Joe. $85,000. I mean, it's shocking. I mean, if you go to a dealership, they try to, take you through the cleaners. It's the best way. I mean, I'm not making an ad here for Swap-A-Lease. There are other places, too, that you can find leases. Right. But there are people that want out. And, of course, you have to accept, you have to have somebody, a trucking company, pick up the truck and deliver it. The guy actually just called me a few minutes ago. This guy who's picking up the truck, he says, "Hey, man, I got to turn this thing around fast. Can you meet me at the destination," which is going to be a parking lot with kind of a big parking lot. "I'm going to get there by 11 p.m. tonight. Can you do it? I got to turn around and get back to where I'm going." So, I'm going to take a video. I'm going to take a video of this, Joe. You'll get a real kick out of it. But my point is, there's no down payment. There's no deposit. There's no nothing. It's basically a bunch of paperwork. Wow. And then there's a wire transfer. It's already happened. The guy's already wired the $4,000.
That's amazing.
It's an amazing story, right? It's an example of when you have an economy where some people are getting laid off. And my prediction is we're going to see all those numbers grow over the next 6 months. Yeah. All those numbers of people like, I can't afford this truck anymore. I got to get out of this lease. I can't afford this second car, third car. There's some cars on there. If you actually go any of these sites, Swap-A-Lease is just one of them. They've got some cars that people are paying $4,500 a month for a lease, Joe. It's like a sports car. Can you imagine that?
In my business, yes. I see it all the time when I look at people's finances to do a loan, and I'm blown away sometimes. I see these car payments for $3,000, $3,500, $3,600 a month for a car payment.
You shake your head and say, "What?
Yeah.
WTF?" Right?
Man.
I mean, the one argument I got into with my wife on this wasn't even an argument. She said, "Okay, you want to get your truck, you want it to have gas, you want it to have towing power. Yeah, that's a guy thing, I get it." But she said, "You know how many Uber rides you can get for the money that you're going to pay per month? Because if you add the cost, if you really add the full cost, the lease cost, even with all the the money that came in, the insurance cost, it's got, by the way, an 8-year warranty on it. So the truck is complete warranty for 8 years. Ford actually does a pretty good job on backing their trucks. I mean, it's their brand. I mean, this F-150 is just their brand. I keep saying Tesla. Amazing. Elon, if you're listening, you should acquire Ford just to create a better electric F-150 than this monstrosity called a Cybertruck. But she said, you could probably have a chauffeur, not just an Uber, a chauffeur with his or her, and it could be a her, who basically drives you around for what you pay. I mean, even with all the discounting, but we all like the convenience of being able to get into our own vehicle, right? Everyone's got their sunglasses in a certain spot, right? I mean, everyone's got a personalization that goes on.
Right. Oh, it's amazing.
I mean, what do you do? Do you try to talk those people out of, get out of that lease? You're ruining your credit score? Or what do you say to them when they've got a $3,000 lease?
Yeah, I'll tell you the other thing that comes up a lot, that one of the reasons I get a lot of referrals from financial advisors, because I have the same way of thinking. I'll give you an example. It happens all the time. Our client will say, "I'm going to do a $300,000 remodel, this one rates are good, but even right now, the HELOC, and they'll automatically go, well, I got all this money in my IRAs and my investments account, and I'll just say, whoa, why would you do that when you can take a home equity line out and you have an appreciating asset over here? And why would you mess around with your stock investments? And it's amazing. Most people don't even think of it. They're just automatically going to take the money out of their investments. It's amazing.
Financial literacy 101,
Yeah.
Joe. They only realize it later that, I shouldn't have done that. I paid like an extra penalty tax because I'm doing it before I hit 59 and a half. And that remodel cost me 3 times as much when I'm done with paying the taxes. Right? I mean, it's a crazy.
Yeah, no, I do a whole exercise with people. A lot of times too, they wake them up to this appreciating asset. A lot of times they don't understand that either. So if you take $250,000 and you buy $1 million property or $500,000 property, you're actually buying that asset that's going to appreciate based on the value of the home, not the money that you invest. Right? A lot of people are like, well, if I buy $250,000 of stock, I said, yeah, but you only get $250,000 of stock. Right? You hope it goes up, but a lot of people still this day and age, maybe the younger groups do, but a lot of people just don't get that. They don't get that.
I see 3 types of people in the world. There's some that disbelieve in any investment and they keep their money in like a passbook savings account at like 0.1%. And they're like, the bank is not, in fact, they spread the money so that the FDIC limit is across like 10 different accounts, right? Because they want that double certainty. The other extreme, I see people that are like, I'm never buying a house. It's an expense thing. I'm okay paying rent. And I could do all these investments in crypto and the stock market and whatnot. And I can just rent. And if I get kicked out, I'll rent somewhere else. I'm just not going to have the hassle. And then I see a lot of people in the middle that are like, I got to have something that I can physically touch and physically go to, because who knows whether these companies, I mean, look, Polaroid and Kodak were some of the hottest stocks in the 1950s, and they're out of business, right? I mean, most corporations don't really last forever. There are very few.
You talking about Ford? You talking about Ford, Jack? Before I forget, I got to share this with you. You probably knew this. I did. I watched the business news first thing in the morning while I have my coffee. It's kind of my routine just to give up markets. And they said that, can you believe this? They said that the Ford stock today is the same price and same valuation it was in 1990.
That's nuts, right? 50 billion. So it pays a dividend. So it has people that like the dividend, but it's in this weird, like someone's going to study this business case where a family essentially can't get into the 21st century on figuring out how to turn Ford into Tesla, because look, Tesla is like 20 times more valuable and it makes like only 10% of the number of vehicles that Ford makes. And Ford's got a dealership network. They've got a great amount of goodwill among customers like me, for example. They don't do the paperwork. If I had to call up the CEO, Farley, I'd say, you don't do the lease transfer paperwork very well. It all gets bogged down in a lot of minutia. It's like, dealing with the bureaucracy. But fundamentally, they make a pretty good product. And at least the truck product is pretty good. Of course, years ago when I was...
People love that F-150. You're right about that. I have friends that love those F-150s. Boy, they love them. Yeah.
I mean, if you look at some of the crash data, in some crashes, it's the only vehicle that you would survive in. If you actually look at the crash data, there are actually simulations of big crashes. Volvos get creamed. Corvette Stingrays, forget it. It's a fiberglass body. You're just completely wiped out. Even Teslas get wiped out. Some of the crash studies, you look at a Ford 150, you survive. You survive in that truck. It's an interesting thing. But getting back to the HELOC thing, a lot of people I talk to are like, it's just a lot of paperwork. You have to do a lot of, steps and a lot of disclosures. I always thought it was more based on the value of the property, but maybe it is about the value of the person that has to pay the loan, right?
It's
like
still,
you really
I can
do
tell
have
you, it's a lot.
to do some big.
So it's a lot simpler than a regular financing loan. It is, but you still have to provide a certain amount of paperwork. But I can tell you the difference is the home equity line is based really on two things and two things only: the loan to value and your credit score. You know, other financing has a lot of factors to go into it, but that's what I tell people all the time. If your loan to value is 50% or better and your credit score is 7 or 80 or better, you're going to get the best rate. It's that simple on a HELOC. And some are actually, you don't see a lot of them, but we have a investor right now that they only go to 400,000. That's too bad. A lot of people want more. Believe it or not, I'm doing several $1 million home equity lines on a regular basis. It's interesting.
Wow.
But we have one investor that will do up to 400,000, absolutely no cost at all, and prime minus a quarter. No cost.
Is this a private party that just likes investing in second trust deeds?
Yeah, that's all they do. Is they just do mostly. It's a federal credit union. We have a partnership with them. I don't even know if they have branches, but it's called Third Federal Credit, and we have a partnership with them. And they'll do an absolute no-cost home equity line for prime minus quarter.
That's a pretty good deal, right?
Very, very good deal. I mean, I don't know why anybody wouldn't do it. Yeah.
With all the convenience of a credit card and a checkbook and all that jazz that you talked about, right?
Yeah.
And the rates change every 6 months, or how do the rates go?
No, just based on whatever the prime does, whatever the Fed does. So right now, prime's at 7.5. If the Fed came out and lowered by a quarter, then your rate would be 7.25. If they raised by a quarter, your rate would be 7.75.
So it could be like every 6 months you could see a change because the Fed may change every 6 months, right?
Yeah, right.
I mean, they usually don't change every month. It's usually like cycles, like 6 months or so, right?
Right. Yeah.
Yeah. I mean, that sounds like a good product, but how does something like Better? Because that's where I got a solicitation that I sent to you. This online platform called Better.
Oh yeah, Better is. I'm very familiar with Better. To me, they have the best back-end technology I've ever seen in the mortgage business. But a lot of the stuff they advertise, most everybody could do. I think they just do a better job of marketing to make it sound kind of like Rocket Mortgage. I think between Rocket Mortgage and Better, they do a better job at really getting people to think, wow, these guys are magic. They can do what most people can't do. But most of them are all the same, to be honest with you. Yeah.
So they load all the data up quickly and probably have a back end AI that goes through and says, yeah, this is good credit, right?
It's slick. I mean, I did a loan. I think I've told you on a podcast some time ago, a couple of years ago. I did a loan on purpose on one of my properties with Better, and I was so impressed with the back end, the steps. Now it was a conforming loan, so let me preface this by saying, it was a conforming loan. That made it easier. If it's jumbo, it's completely different. But it was a conforming loan, and I literally never talked to one person. I even scheduled my title sign off. They came to my house. Everything was a drop down taken care of. Amazing.
You're like,
and I've been doing this a long time. It was impressive.
You're like, hey, I really don't want to talk to anyone that's going to sell me. I know this thing inside out. Just get the work done and be quiet. Right. It's like my wife, whenever she gets into an Uber, she just says to the driver, please turn off the music and let me have some quiet. Like, she doesn't want to talk to the driver. So if I say to the driver something like, hey, I saw that you've done 10,000 rides. What's it been like? How did you get a 4.99 score on 10,000 rides? I don't want the conversation. Stop the interview. I don't want to do it. It's pretty funny. Because some of these people are very loyal. They're very loyal. It's amazing that Uber's gotten the loyalty that they've gotten. So you were able to get a better rate than you could have gotten for yourself from Better, because you're in the business. I would assume you could get yourself the best rates, right?
Yeah, I could. I mean, I do have an advantage because I have what's called a P&L model, so I have a lot of margin that I could work with. I didn't before in previous companies, but So I could pretty much do anything depending on, what the situation is. I have more flexibility. Yeah.
So you really got to experiment to see what this better stuff is all about.
Yeah.
And it passed your test, right?
It was outstanding. Yeah. I mean, they did a great job. And I think that, honestly, when it comes to conforming loans, I want to say this, and I probably shouldn't say it because it's the business I'm in, but because I've grown my business on relationships and staying in touch with people and adding value. But I can tell you on a kind of a, very vanilla conforming loan. Let's say you're buying a place for $600,000 and you're borrowing, $300,000. And if you're a W-2 income earner, I'm telling you, it's really, it's so vanilla. You could really do that online and never talk to anybody. I can't, I'm saying this and probably put myself in jeopardy.
No, but California, the numbers are even higher than that for conforming, aren't they? What's the number?
Yeah,
in
California, the numbers are actually up to a little over 806,000. Yeah.
Okay. So that is like $1 million property, and you're putting 20% down. Maybe you get an $800,000 loan. Right.
Yeah.
So Joe, when you see interest rates probably dropping, like you would probably say to most of your clients, maybe you wait to see what Trump does here, because maybe he will pressure Powell to start dropping. And there are some indications that he is putting pressure on other governors of the Federal Reserve who have now publicly said they are in favor of dropping rates. And of course, I think Powell worries more about inflation than he does about anything else. And he does think, at some point you overheat the economy and it causes a lot of inflation. Of course, in my opinion, we're in for a lot of layoffs. This AI stuff.
I was going to tag on to what you said earlier, Jack, and right now I would say I study this stuff every day. And I think right now the worry is not inflation, the economy, corporate earning, all that stuff, but layoffs I think the job market is going to be the one thing that's going to dictate the Fed by start dropping, I think.
Right. Yeah. I mean, I think we're going to see a lot of middle class people that thought they had really secure jobs. And, they were pushing paper around and maybe it had some value. I don't know. You can criticize a lot of things that people do. It's easy to criticize. But a lot of this automation is going to take hold. And we're going to see a lot of people say, my job was displaced by an AI agent that frankly does it faster, 7 by 24, 365. And, that's a big difference in and of itself. That's like 1/3 more of the work here. And more than that. It's more than that because it's 7 by 24. And most people work maybe 6 hours a day and an 8-hour day, maybe. And it's 252 days a year, maybe. If you take out vacations and whatnot, maybe it's 220 days out of the year if you really do the math. So we're going into a new era for sure, if you ask me.
I think also on a macro level, I think what's happening, and I know you would probably agree, but I think you have companies in the last, say, 6 to 8 months that have really been behind the scenes trying to figure out how AI is going to really form their business over the next 2 or 3 years. And it's going to take a while, but I would guess by the pressure from investors and the board members and everything else, you're going to see some massive layoffs with some companies, even if they're not getting the call right, because there's pressure now, right? Don't you think there's pressure?
Real pressure. And the two big players that will probably hit Silicon Valley so hard will be a big announcement from Google that they'll tie right into this antitrust case where this judge is going to decide some remedies in August. So we're not that far away. And Google's going to say, you know what? We have to reorganize our business because we have antitrust pressure to do it. And then number two, we're going to see Microsoft that has a big campus in Silicon Valley, but also obviously up in Redmond in the Seattle area. Same thing, same drill, which is we can get a lot of stuff done with automation. And then we'll see other players start to fall into the same theme, right, which is you got to have automation, and the automation has got to be given priority because it works 10 times faster, if not 100 times faster, and it works 7 by 24 by 365, and you don't have any of the HR problems that a lot of employees introduce to companies.
Yeah.
And so it's inevitable. And I don't know how quickly those people will be able to get into a new role. Eventually they probably will, but it may take some time for it to happen. It really might.
Yeah.
And so we'll see.
Yeah, I think the job market, I think that's going to dictate the Fed's next couple of moves. I saw some stuff from Morgan Stanley a couple of days ago and someone else, and I don't know, I'm going to say this and it's not coming from me, but they're talking about possibly rates back to 2.5% to 3% the next year and a half.
Wow.
I don't know. It's hard to believe right now the way we sit, because I'm not sure that would be good for the economy, but I don't know. I mean, if the job market starts suffering and they see some adverse reactions going on to that, listen, nothing will affect the economy quicker than a heavy loss of jobs, right? Because now you have people not spending money, they're not paying their debt, they're losing their houses. A lot of things happen when the job market's weak.
Right. I mean, the indicators I look at are like leases that are basically getting, transferred, vacation homes that are getting sold.
Right.
Just these things that are they don't really affect even stuff like a monthly membership to a gym or a yoga studio. People will cut that and say, I'll get on my bicycle and ride through the park, free. And, there's no need to pay $150 a month. It's funny because I talked to this guy. I'll end with this idea. This guy said to me, I remember when I could get a club membership in a golf course for $250 a month, and it gave you a number of slots to use the golf course.
Yeah.
He said, you can't get that in California for less than maybe $2,000 a month to actually become a member, and you have to pay an upfront amount, right? And he was saying,
it's funny you say that. I just had a friend that's been trying to crazy. You're going to pay at minimum. You're going to pay 10, 15 grand up front, and then it's anywhere from $1,200 to $2,500 a month.
Right. For what? Maybe 4 rounds per month, maybe. If that.
I'm not at golf, but it really doesn't matter. I've always said this. Believe me, I've looked at this model for years, and I come back and say the same thing. And regardless if I had money to throw away, which I don't, even if I did, I'm a person who likes to play different golf courses. So why would I spend so much money and play the same golf course every single day? Doesn't make sense to me.
Right. But when you take the person that has paid and he or she says, you know what, I'm going to cancel it, I'm getting out of it. Yeah. That's an early indicator that the belt is getting tightened and things are changing. And I think you see that ripple through the economy. People don't go out to eat as much. People don't do certain things anymore. People don't go on overseas vacations. Right. I mean, we're probably seeing it even this year. I don't think there's a lot of people from overseas coming to the United States as much right now. Well, that may be more of a political thing, right?
Yeah, the other thing I track is travel, and I can tell you that's an interesting dynamic too. We're getting data right now that they said tourism in Hawaii will be down the most they've seen it in the last 7 or 8 years this upcoming summer and fall.
Wow.
So there's a lot of, to your point, there's a lot of people looking at discretionary spending going, do I really need to take that trip? Do we really take that same trip, or we're going to spend 10 grand, right? I mean, a lot of that stuff going on.
But you would say to people, we can end on this. You would say to people, if you think your job's at risk and you have a big equity, get your HELOC, get your home equity line of credit now, while you have the W-2, while you can truthfully say you're employed, right? Yeah. You can truthfully say that. And then if you lose your job, you lose your job. You have the buffer of having 6 months or more of dry powder to cover that gap in finding the right next job, so you're not forced into something awful, right?
do it before you lose your job. But I'm going to say something too that's going to surprise a lot of people. But in my business, they don't know this. I do about 30 to 40% of the loans I accomplish with people with no jobs, and people are going to go, how does that happen? We have asset-based lending. So if you're between jobs or you get a big buyout and you sold your company and you're 45 years old, but you have, $5-6 million sitting in there, we give people income based on their assets. So I will say this, if you're a person who has a fair amount of assets, you could still get a loan without a job. I know it sounds funny, but it could happen.
And you would say this deal that you have with Third Federal Credit, which is the no-fee HELOC, it really has, until you actually draw down, it really has no real cost, because other than getting the paperwork to you, there's no filing fee, there's no application fee, there's no closing costs, there's no nothing. And then you basically have another asset, which is this line of credit that you can draw on, and you eventually will pay the interest back, but basically you can draw on it even to pay the interest that accumulates on a monthly basis, right? So you can continue to draw on it.
Yeah, it's a great deal. It's the best one going out there. I mean, if you want more, you could have more, but that's the one that comes, a lot of banks, I'll say this too, the Wells Fargo, the B of A's, the cities of the world, a lot of them will not do equity lines anymore unless they do them for the private lending. So some of their exclusive customer base, like private lending, they'll do it.
Right.
But the basic Wells Fargo today, if you walk in and you even make a good salary, they won't do HELOCs. They won't do them anymore.
Wow. Well, Joe, how will people reach you? Because you introduced some good ideas here that, frankly, I think I didn't know about, and you've educated me on this entire topic. Yeah. So what would people do? How do they reach you best?
Yeah, a couple of different ways. Best is a cell phone, 408-838-9060, or you can always just email me at Cucchiara, that's JCUCCHIARA at gemcorp.com. That's GEMCORP.com. And or just look me up on Google or my website. I'm an easy guy to find.
And plus, you're the founder of the Cucchiara group, right? You're the founder. You're the founder and CEO of that group, right?
It might surprise some people, but that's true. All right. Well,
all right, Joe.
Posted. I appreciate everything you guys are doing. Thank you.
All right. Thanks, Joe.
Thank you.
Talk to you later. Take care. Thanks.
Tune in next time on The Valley Current.